my home prices are going up. I'm doing fantastic. But the renter and those who are working, in the lower class jobs, blue collar jobs, they're really, really hurting because their incomes are so far behind inflation. And they don't have the asset price appreciation that we have. That's the problem.
The Financial Survival Network. Now more than ever.
And welcome. This is Financial Survival Network. I'm your host, Kerry Lutz. Michael Pento, pentoport.com, is with us now. Any questions, comments? KL@kerrylutz.com. Michael, one of my favorite guests, not just because so many thousands of people listen to our sessions, but because you've been spot on about exactly what's happening. I mean, our interview about that the bond market basically doesn't exist anymore garnered so much attention, I couldn't even believe it. But now we're entering the next phase, and we got election insanity going on here. What is your take? Does it make any difference who gets elected?
Of course, it makes a difference who gets elected, but I'm not sure if either candidate gets elected. And I'm talking about Donald Trump. He's by far the better of the two choices, but he's not a libertarian and he's not a sound money guy. So if you're asking me if all our problems will be solved by the election of Donald Trump, no. I mean, I just laugh at people say, "Oh yeah, Donald Trump." Well, yeah, I'm voting for him again. I can promise you that. I'm not. I call Kamala the cackling communist. But
you're kind. You're kind. There's some other choice words we could come up for her, right?
Here's where I am so despondent about Kamala Harris. Her idea to make home prices affordable is to give everybody who's a first-time home buyer $25,000 to buy a house. And I'm like, this is who we elect, economic illiterates. This is who we nominate as a president. Now, I'm thinking about government subsidies for housing or government subsidies for education. Did government subsidies for college bring down the cost of college tuition?
Yeah.
I mean, you talk about if you really want to goose the price level of an asset, have the government get involved and give a subsidy. But here's the other thing that I worry about. Wasn't one mention of how we're going to pay for it?
No, we don't think about those things.
But the government doesn't have any money. They have two choices. They could either steal it from the people who have it, or they can print it. Those are the two options. Am I wrong? Is there a government like stash of cash somewhere in the Ethernet or the netherworld? Where?
I don't know. I think they're holding a lot of Bitcoin though.
Oh, okay. Well, the government could hit the bid on Bitcoin. That would be fine with me. I wouldn't care. Listen, the government doesn't have anything, has nothing. They have assets they could liquidate, but when they liquidate assets, they're taking the money from the public. So they're just shuffling money around. So $25,000 per person. Everybody wants a house, can get one. That's going to drive the price of houses, especially new, starter homes, through the roof. And it'd be a massive hole in our debt and deficits. That's their prescription to fight inflation. Here's another one for you. I don't want to talk too much about politics, but I'll give you one more.
Yeah.
What is the reason why we had inflation, Kerry? We asked Kamala Harris. It's because corporate greed suddenly sprouted up out of nowhere. Suddenly corporations had this epiphany and got greedy around 2020. That's her version, corporate greed. Even though if you look at actual corporate profit margins, they're pretty much unchanged since 2020. So there hasn't been some price gouging from corporations. Maybe, Kerry, it had something to do with the $6 trillion of helicopter money deployed upon the population by the government, by both Trump and by especially Biden, who is spending trillions of dollars after the COVID, craze was over. Maybe it has something to do with the fact that the Fed printed $5 trillion of that $6 trillion in helicopter money. How about the M2 money supply went up by $6 trillion? So you told people you couldn't go outside and produce things. You couldn't make things. You could order things from Amazon, though, if you wanted to, or from the UPS man. Every day was Christmas for those people. And you gave them trillions upon trillions of $1 trillion in mortgage forbearance and enhanced unemployment and helicopter money, checks in the mail. That's why you have inflation. But Powell doesn't say it. That's how you got inflation. Trump blames the price of oil, which is a symptom of what I just said. And Harris blames corporate greed. My God, are we living in a world of economic illiterates?
Yeah, totally. Like, hey, when the pandemic was going on, I knew it was going to happen to housing prices. I had been renting because I had sold the house, and I was kind of in between. And I went on a desperate search to find a house, and surprise, it, at least in the nominal price, doubled, in just 2 years.
Yeah.
And I'm not alone in that.
Yep.
Back in Germany in the Weimar Republic days, basically people borrowed as much money as they could, and then when the mark collapsed, their creditors were hiding from them. They didn't want to get paid back in the fully depreciated currency. I wonder how far we are from that.
Well, I don't know if we're there. We're certainly not there yet, but I never thought in my wildest dreams, when I was a kid getting into this business in the early 90s, that our government would print trillions of dollars per year. So if from 1913 to 2008, the government printed $800 billion, the Federal Reserve printed $800 billion from the formation of the Federal Reserve all the way to 2008. And then in those ensuing, so was that, 15 years later, the balance sheet went to $9 trillion.
Yeah.
So, that doesn't sound like America. That doesn't sound like sound money. Of course, we had our excuses. We had the once in a lifetime global financial crisis and the once in a lifetime virus, which, didn't really turn out to be the bubonic plague. One-offs, but really, I mean, the Fed's buying mortgage-backed securities in 2022. What the hell does that have to do with COVID? And then you wonder why home prices went up. And then people blame corporate greed for inflation, even though their margins haven't improved. So, yeah, I mean, the lunacy out there is off the charts.
Okay. Well, one thing I will say is certain companies, I remember the last round of inflation we had, and I had a printing company. And when we would raise prices, because there was inflationary expectations built into the system, we try to add a little more and try to expand our margins, but that is limited. Fast food has done it, McDonald's has done it, but now they're feeling the pain because they expanded their margins by 3 or 4 points, but now for the first time sales are down because people have you got that thing called the substitution effect, right?
Well, the truth is, Kerry, that the middle class has been wiped out in this country. If you look at the bottom 4 quintiles, they're really, really hurting. And the fact that what I find so disturbing is that the price level is so high that they can't afford. You look at a house, the price of the house, the insurance, the taxes, the maintenance, the fees, or everything associated with owning a house. It's unaffordable. And we don't need the price level to do anything but go down. The price of homes, the price of food, the price of new cars, the price of insurance, taxes, those things have to fall. The price level has to fall. In economic speak, that's deflation. In Powell's mind, in the mind of the Fed, they're declaring victory.
Yeah.
Not that the price level has fallen enough. It's the fact that the price increases, the rate of change has fallen enough. In other words, the Fed is saying, I don't care that middle class has already been wiped out. The prices are too high. I only care that instead of going up by 9% a year, they're going up by 3% a year. And 3% a year is just fine with me, even though it's not 2. How is that possible? I mean, you're wringing your hands about a slight uptick in the unemployment rate because the Somme rule has been triggered. Ooh, I mean, unemployment is what, 4.3, 4.4%? It's still relatively historically very low. And we're ready now to start cutting interest rates to try to get inflation, back up again.
What's that going to do?
And I think that's so disgusting. I think it's so disgusting. And I think the middle class of this country gets it.
Yeah. So money printing is not the solution here, but the stock market seems to have liked it.
Yeah, the stock. Well, that's the thing. The thing that the Fed purports to care most about is the poor, the poorest among us, the minorities.
Okay, they care.
Oh yeah. Yeah. Well, I'm looking at. Let me see. I own multiple homes. A pretty big stock portfolio. Doing fine. Doing great.
Yeah.
But if I rented and I have a manufacturing job, I'm getting wiped out because I'm spending most of my income, if not all, or maybe even in some cases more than my income, because our credit card balances are exploding.
Oh yeah.
I'm paying, 50, 60, 100, 110% of my income on the stuff that I need to survive: shelter, clothing, and food costs. But the richest among us are paying a very small percentage of our income. This way, inflation doesn't really affect us because, wait, my portfolio is going through the roof. My home prices are going up. I'm doing fantastic. But the renter and those who are working, in the lower class jobs, blue collar jobs, they're really, really hurting because their incomes are so far behind inflation. And they don't have the asset price appreciation that we have. That's the problem.
So true. Hey, so true. So true. And then the idea of price controls, that's going to fix it. And it's just complete divorce from reality here.
That's never happened. There's never been an instance in this country or other countries where they tried wage and price controls. Have they? Oh wait, they have, and they have. And how do they work? Well, when you tell me as a corporation that I can't produce this good or service for the price that I need to charge to actually make myself solvent, to make it a profit, guess what I do? I stop producing those things. And that means you have shortages. And that means the prices actually go even higher for those things that you want. This has been proven throughout history in this country and other countries. I mean, if we want to look like Venezuela, follow cackling Kamala's economic plan. It's just disgusting that I don't hear, where is the candidate that says, RFK, I guess you could say that, is the only person that was even alluding to it. It's like, where are the people out there saying we need to put the handcuffs on the Federal Reserve? Stop their madness. And why in the world are they going to start to expand their balance sheet now? I mean, that's how you get, the Fed gets the interbank lending rate down by printing money, right? That's how they do it. They flood the banking system with reserves. They don't even need anymore. I think there's like $3.3 trillion in reserves in the banking system now. They're flooded with reserves as it is. They don't need any more. But we're going to now try to get borrowing costs down so the country can get more in debt. Well, I pulled up some numbers recently. If you look at U.S. total non-financial debt to GDP, so that's everything, corporate, government, business, individual debt, personal debt, that is now 260% of GDP. Do you know what it was in the year 2008?
It's 15%.
240% of GDP. Do you know what was in the year 2000? It was 180% of GDP. So we have more total non-financial debt in this country than ever before. We have the most leveraged we have ever been. If you look at government, corporate, business, and the household debt. What are we doing lower interest rates to get people to take out more debt? We want people to get more, load up on more credit cards and auto loans? Is that what we want in this country? It's insane. We've gone so far off the reservation with asset prices and credit bubbles that I think the Fed has realized they've reached an epiphany. They have no choice. They have to keep this bubble going because if it collapses, if and when it collapses, you're talking about a devastating depression.
Oh, yeah. There's no question about it. And they're kind of caught between a rock and a hard place, right?
You know, I did some more research and I said, so now the Fed's about to cut interest rates. The Fed is about to ride to the rescue. Let's go looking back in time. Let's say, do you know when the Fed started cutting rates leading up to the global financial crisis, which started in 2000 at the end of, it started at the end of 2007. Yeah, December of 2007. Do you know when they started cutting rates? Wasn't in 2008. It was July of 2007 when they started slashing interest rates. They took interest rates to 0% from 5.25%. Mr. Bernanke did. That didn't stop the S&P 500 from crashing by 50% and the housing market from losing 33% of its value. So do you know when the Fed started cutting rates in the year 2000? That 2000 NASDAQ bubble?
Right.
Do you know when they started cutting rates?
I don't remember.
Okay, so it was the start of the year 2000 is when they started cutting rates. It was December. It was actually, I'm sorry, the end of the year 2000, December of the year 2000. By the end of 2022, the S&P 500 was down 50% and the NASDAQ lost 80%. And the Fed took rates from I think it was like 6.5% down to 1%. What did we, the fact that the Fed is going to start cutting interest rates is like, oh, yay, the Fed is coming to the rescue again.
Happy days are here again.
If the Fed cuts interest rates, the effective Fed funds right now is 5.3%, Kerry. If the Fed cut interest rates by 1/4% or 50 basis points or even 75 basis points, you're still going to have an interest rate that's around, say 4.5%. Let's say they cut interest rates to 4.5% by the end of this year. They're still way above the rate of inflation the way they calculate it. Inflation is 2.9%. So you still have a real Fed funds rate. That means the Fed is still very, very restrictive, which is good. I'm so glad that the Fed has at least tried to bring some reality to this market and to these asset prices and to the credit bubble. But unless the Fed slashes interest rates trenchantly, significantly, acutely, right now, bring them down to 2% as fast as possible, which would be devastating for the long end of the bond market. I'm not saying this is the right thing to do. I think that would save the stock market for a while. Maybe. But that's saying that's if the long end of the yield curve didn't spike, which is very probable that it would. But by going slowly now and reducing interest rates, I don't think that's, in other words, history says it's just not enough because we still have a lot of, like I said, total non-financial debt to GDP is 260%. That's a record amount of leverage in this economy. You have to ignore the leading economic indicators, which say that GDP growth should be about 0% going forward. 0% handle. That's really not much in the way of getting earnings per share growth at 14%. There's a 14% EPS growth priced in for 2025. Do you think we're going to get there with nominal GDP growing at almost nothing?
Yeah.
I don't think so. So you also have to ignore the inverted yield curve. The yield curve has been inverted for the longest duration in history.
Yeah, ever. Right.
Ever. And it was one of the steepest inversions by 100 basis points. Should we throw that? Since 1955, every single time we've had an inverted yield curve, we had a recession, except for one time and that was in the mid 60s when GDP went from 10% to 0%. So the inverted yield curve, yeah, I'm not going to ignore that. I'm not going to ignore the leading economic index. I'm not going to ignore the fact that the real Fed funds rate has been positive 2% for a very long time. I'm not going to ignore the over leveraged debt and situation in the economy. I'm not going to ignore the asset bubbles that we have. I'm not going to ignore the Fed's balance sheet that's shrinking. There are many reasons not to believe, even if you say, Michael Pento, you're a Cassandra, You're full of it. You're a perma bear, even though, we're making money this year. I mean, I only lost money one time, 1 year in 2022. We lost about 3.5% in the portfolio. So I'm not a perma bear who's always short the market.
Yeah.
Sometimes I'm massively long and very profitable.
Mhm.
I'm just saying that if you're gonna believe and get ready for this massive rebound in stocks and massive rebound in asset prices and a re-leveraging of an economy and a rebounding in economic growth from here, you are insane. It's just not going to happen.
Hey, so what about the budget, which is out of control? I asked ChatGPT to analyze every line item in the budget for 2025 and cut to $2 to $3 trillion. So the first thing it does is come back and start. You can just see how crazy it is. It says, well, if we increase the corporate tax rate to 28%, and it gives like all these tax increases. So I say, perform the above analysis with no tax increases, get rid of corporate welfare and all other government wasteful spending. So ChatGPT in like 30 seconds cut the federal budget by $3 billion, But of course, like we save 400 billion on corporate welfare. We save 500 to 600 billion on so-called defense. And it says we should get rid of the F-35 Joint Strike Fighter program. Healthcare, we save 400 to 500 billion by getting rid of Medicare overpayments. Drug prices will save 200 billion on. Medicaid expansion reform will save 100, and preventive care expansion, which is the one thing I really appreciate about RFK Jr. is he's actually making our poison food supply a national issue, which it should have been all these years, but it's been swept under the rug by big pharma and big ag and big healthcare. And
I just came back from Italy. I just want to say I just came back from Italy not too long ago, and I ate like a pig. Every meal was eaten in a restaurant.
Yeah.
And I poured pasta in my belly, and I ate like a pig, drank every night, a bottle of wine. And you know what? I came back and I didn't gain an ounce. I came back, I didn't gain an ounce. Now I go out to eat here, one restaurant, I gained 3 pounds because our bodies are not able to tolerate the food.
No.
The genetically modified grains and corns that we put in our body.
Frankenfood. They call it frankenfood.
And the sulfites in our wine. It's just, they don't eat that way in Europe, and much healthier. But what you said 3 billion for, I think you meant 3 trillion. You could call you
3 trillion. I'm sorry.
So 3 trillion. Terry, did you ask ChatGPT if you cut $3 trillion off the budget, what does it do to the revenue that the government gets? Ask ChatGPT that. I will ask
it.
Ask it because I guarantee you, in reality, I don't know if ChatGPT would know this, and I don't claim to be smarter than ChatGPT, but if you're going to cut $3 trillion off of, I think we have a budget of $6 or $7 trillion, your revenue is going to plummet short term. It's the right thing to do, but your revenue will plummet short term, and you will have a depression.
I'm asking it right now.
Go ahead.
Reducing the federal budget by $3 trillion through spending cuts would have significant effects on government revenue and receipts.
Of course.
This is so much fun.
What does it? I mean, does it put a number on the significant?
It would say it would. Well, it doesn't. It won't go. All right. So let's say give specifics of the above. It likes to talk in generalities like politicians, the above cuts.
So we have about 5 trillion. So revenue is about $5 trillion.
Right.
What would the revenue be under your very, very austere but very, very appropriate budget plan? That's what I want.
Specifics of the revenue reduction from above. Okay, let's see, man. I'm just curious. I don't think it has a clue, but of course it doesn't want to do it now. All right. Here we go. Reduce borrowing could have a contractionary effect on the economy, particularly if they reduce government of consumer spending and investment. Consumers don't invest, they just spend. This could lead to a slight decrease in tax revenues if economic growth slows. However, the stabilization of federal finances could improve long-term economic confidence, potentially offsetting these effects.
So chat, I agree with chat GBT completely, except for when it says maybe and possibly.
Yeah.
It would be, you would have long-term massive benefits from doing what you just said, slashing government spending. In the short term, we would wipe out GDP. We'd have
Be a disaster. It would
be a disaster, revenue wise and every other wise.
Yeah, and the global economy and all the debt that's out there would have to be marked to its true value, right? So it would shut down the financial institutions of the world. We'd have to you couldn't do it without a recapitalization plan for the banks, right?
You're right, Terry. Just to give you an idea of how fragile and how stretched the financialization of this world is, we had the slight unwinding of the yen carry trade, which is where you borrow yen you go to the Bank of Japan and say, how much yen can you give me? Well, you give as much as you want at no interest,
I'll take it.
and I'll take it, and I'll go to Mexico and buy Mexican bonds and get 10%, or Brazilian, or even U.S. bonds and get 5.3%. And then you get the kicker, which is, since everybody's doing this, the yen is falling in value. So I get the currency appreciation and I got the interest rate differential, and hedge funds love this. This is a great thing to do. Then all of a sudden, the Bank of Japan says, Governor Ueda says, you know what? I'm going to raise interest rates all the way up to 1/4%. Oh my God, 1/4%. And that sent the yen carry traders scrambling to sell their bonds, sell their stocks, sell their crypto, sell everything, sell that currency, and buy back the yen to close out their synthetic short of the yen. And then what happens then? I think it's the fourth or fifth largest economy on the planet had its stock market, the Nikkei Dow, drop 20% in like 5 days.
Bad idea.
1/5 of the entire value of the country's stock market plunged because of a little tiny corner of the financialization of this world started to have little cracks in it. So just think about what's going to happen when reality hits. There is no, like I said, there is no easy way out of this. Even if you did exactly what you said, we slash spending, or if the Fed was to slash interest rates, the long end of the bond market has no damn business being at anywhere near 3.8%. It just doesn't belong there. It should be closer to double digits, because when you factor in inflation and credit risk of this country, it should be much closer to 7%, 8%.
Yeah.
So if the Fed would get out of the way, the market would send rates much, much higher. We with $35 trillion in debt, unfunded liabilities over $100 trillion, $2 trillion deficits in peacetime and in prosperity time, $1 trillion in interest payments, and you're going to lend money to this government going out 10 years at 3.8%. Count me out on that calculation.
Hey, you know what some people call unfunded liabilities and obligations of the government? Others call Social Security and Medicare.
Right. Yeah. Try getting rid of them. That's what you pretty much did with Chat GBT. Getting rid of government obligations is wiping out other people's income streams.
Yeah.
And that has a massive, you can't do that. Senior citizens paid into they paid into it. They expect a certain amount to survive. So, there's major changes that have to take place. I would start by raising the retirement age now, but Terry, tell me, maybe I'm wrong, because RFK Jr. has dropped out. Which one of the two candidates is talking about saving Social Security and Medicare by putting in programs and plans in place now to keep them solvent?
Well, they're going to do it anyway, because push comes to shove.
We're going to print. They're going to
somewhere.
do anything. They're going to print, Kerry, they're going to print it.
Yeah.
They will print it. They will give, these programs will always be solvent. This is my opinion.
Yeah.
Been in the business 33 years. I'm 60 years old. I've done this long enough. I've seen enough. Those programs will always be solvent, but they're not going to be solvent in the way you want them to be. They're going to hand you a check for 100% of what they owe.
Yeah.
The purchasing power of what you're going to get is going to be vastly attenuated.
All right. So it's a house of cards. What do you do? How do we defend our own personal finances against this? Do we buy insurance? Do we buy credit default swaps? Do we get out of the stock market and get a bigger mattress? What do you do?
Well, that's why that is the genesis, the progenitor of the inflation, deflation, economic cycle model that I created. I look at those components. There's 20 components that look at the second derivative of inflation in the context of the growth of the economy to let me know when I should get out of the stock market. Right now, it's telling me you could still invest in the stock market and make money. But when the red flags start to fly, and the red flags would be credit spreads, they'd be financial conditions. They would let me know in advance when I need to get out and be more defensive. In the meantime, the way I'm making money and the way a lot of people are making money is they're buying gold. I'm buying, I have a good, healthy position in the precious metal. I have low volatility. I have low volatility stocks. So think about consumer staples, utilities. Those things are, I think, of what you have to own as we enter into what I think could be a really, really challenging 2025, both politically and economically speaking.
Sustained period of economic contraction. Here, I'll tell you the summary that ChatGPT said. Total indirect revenue impact, the combined impact of these spending cuts could range from $85 to $160 billion annually due to slower economic growth, reduced profits, but we know that corporations don't really pay any taxes anyway. And but it said, well, these reductions are significant. They are outweighed by the direct savings achieved through $3 trillion in spending cuts. And I want to find the politicians got the balls to actually do this. You know, that's the guy I want to vote for.
I know, but where is he? Where is he? Him or her? Where are they? It's not cackling Kamala, and it's not Donald Trump, unfortunately. Although, again, he's far better than the other alternative.
And he might surprise, too, because it's going to take a crisis. What we're saying is nobody's going to do this proactively. Nobody is going to take the steps to avoid the inevitable crisis. So the crisis hits, and then hopefully everything will be on the table.
I think what's going to be on the table, you know what? The Pavlovian reflex action that's going to be on the table, unfortunately, is going to be helicopter money part due, and ZERP and QE. That's what they do. That's all they know. No one thinks long term, because what is the politician? Who is the central banker and who is the politician who's going to stand up and say, listen, what we need to do is let markets function. We need to bring down the level of these asset prices. We have to let banks fail. We have to let pension plans and investment banks and insurance companies fail. We have to let people fail, corporations fail. We have to wring out all the excesses in the economy. It's going to be a depression that lasts for a few years. It'll be brutal. But on the other end of that, we were going to have stable prices, a sound dollar, a sound currency, low taxes, low interest rates, low inflation, and, prosperity for a very long time. Who is, I don't know. Who's going to do that?
But, Michael, it's like when you have a kid, all right, and the kid is hungry, and you say, but I've only got chocolate to give him. And that's really not good, because, hey, like RFK Jr. will tell you, I've only got chocolate and seed oils. What am I going to do here? But the kid's going to stop crying. All right, I'll give him a little piece. And then that shuts him up for 2 seconds. All right. And then he comes back screaming worse than ever. And then you shove the whole candy bar in his mouth and shut him up. And that's what our politicians do here.
I think it takes a lot of education. There has to be education has to be, and the real education,
Yeah. Real
education of
economic.
both education, economic education for our politicians, and economic education for our population.
Mhm.
Not you know, where is that? How can we transmit that? That's what we should be focused on, and that's why I come on programs like yours. If enough people see and hear the truth, maybe they'll say, hey, for the sake of my children and my grandchildren, I'm willing to suffer like this because there's no other alternative. And it's never going to happen, Kerry. It's not going to happen.
Yeah.
What's most likely going to happen, unfortunately, is we're going to have, like I said, QE, ZERP, helicopter money. It's going to cause the long end of the bond market. The bond market is going to go in full revolt mode because of inflation and insolvency concerns. When you have interest rates spike to that level, where an inflation and interest rates cause utter economic chaos, then the people will say, let's try something else. They'll demand another plan of action. The only problem is, as bad as things are right now, it's going to be even worse by the time we get to that point.
Yeah. Hey, and the bankruptcies, let's not forget, it'll be cities and states as well. 10 states will go bankrupt. They can't under the existing law. It'll have to be amended. Well, they won't call it bankruptcy. They'll call it a reorganization or something. And the New York City, Chicago, LA, San Francisco, you know, all these failing cities, excuse me, are all going to go, you know, Detroit. Well, they already did go bankrupt.
Yeah.
And they're actually on the upswing, interestingly enough, when I talk to people there. But, and how are you going to pay these cops? And we got a prescription for anarchy here, don't we?
Yeah, well, I think hyperinflation would be, or at least intractable inflation, multiple years of double-digit, near triple-digit inflation. That's going to be enough to cause that's going to be the catalyst for change, and that will cause bankruptcies. Investment banks will go bankrupt, banks, hedge funds, pension funds. You know, that is what you're going to need, I think, to bring some reality to this market. It's not going to come voluntarily.
Yeah. Where's our Javier Milei, right? That's
Exactly.
what we need. I don't see him on the horizon. He's unelectable. And it's only, look how long it took Argentina to hire that guy, right? A century of failure, Michael. Finally.
Yeah. Even in Zimbabwe, which is a serial hyperinflationary economy, even in Zimbabwe, they said, you know what? Let's just link our currency to gold. They have linked their currency to gold. And I don't know if they'll stick with it. I don't know if it's going to work, but it took, a series of hyperinflationary debacles where the currency was completely wiped out along with the economy. They said, let's try something new. Maybe we'll get there someday. Maybe you and I will see it. But it would be nice to see the definancialization of this country and the world. Yeah, correct. And it would be nice because you know what? That's how you get the most freedom and prosperity in a nation. A viable and healthy middle class is what we're looking for. And maybe someday it'll happen.
Hey, remember, for 40, 50 some odd years, the country got along just fine without a central bank. Think of that.
Not that we got along fine. It was the period of greatest prosperity this nation has ever seen.
Yeah. All right. I think we'll leave it at that. Pentoport.com. Make sure you go there, sign up. Hey, the link is in the show notes to this interview on financialsurvivalnetwork.com. Please sign up for your free newsletter. Michael, we'll talk to you again in a month and see what further madness has unfolded.
All right. I'm looking forward to it, Kerry. Take care.